everyone, it's Mark the Taxwit with your Tax Tip Tuesday. So, I just want to clarify something that came up that I've seen on social media posts. I've seen it on Facebook. I've seen it on Twitter. I hear people talking about this a lot. And it's being presented as, there's this new tax on people. If you get any money from people on Venmo or PayPal or something like that, that all of a sudden you're going to be paying taxes on it if you get more than $600 a year. There is some truth to that, but I'm going to have a link in there where there's a fact checker that explains exactly what's going on. If you get cash income for doing a job, technically that is not tax-free. It might seem like it because the IRS doesn't know about it. You're not getting a W-2, you're not getting a 1099, but if someone gives you $1,000 to build them a deck, that'd be a pretty good deal, but let's say they did that, you are supposed to report that as self-employment income because your profit is more than $400. That's the tax law. Same thing with any kind of money that you do. If you get paid by Venmo or you get paid by PayPal for doing jobs like blowing out sprinklers, or if you are doing any kind of home repair work, plumbing, electricity, electrical work, all of that stuff is taxable income that you are supposed to report on your tax return. All right, so you're saying, well, hey, if the IRS, they're just trying to squeeze the little guy. Well, okay, yes, in a way they are going to be enforcing people to pay taxes on something, but that's not a new tax. It has always been that way. Whether you choose to pay it or not, or claim that income, that's up to you. I have vending machines. I get cash income. I claim that on my taxes. That doesn't mean that if I wanted to, I could just ignore that income and skip it because the IRS doesn't know about it. If they did find out about it, I would be in big trouble. All right, so when you see this documentation coming, a 1099-K doesn't mean you're going to get one of them because you paid for dinner and everyone sent you money to reimburse you, or that you split a check with someone, or that you bought something at a store for someone and then they gave you the money and they sent you Venmo or PayPal. Unless it's labeled as goods and services, you will not get a 1099-K. The threshold for a 1099-K is now $600. It used to be $20,000. Yeah, it's a big drop, but that's just because the credit card companies, they thought, well, you only read people using credit cards are going to be over 20,000. So Uber driver, Lyft drivers, you didn't get a 1099-K unless you did over $20,000 in business. If you make $10,000 a year for Uber, you're going to get a 1099-K because that is for goods and service. So don't fall into the trap of listening to these posts where it's saying, they slipped some new tax in during the American Rescue Plan Act of 2021. They did lower the threshold, but they did not add a new tax. I can definitely help you because you might be able to write off a lot of expenses. If you sell some furniture or something like that, and some reason you get a 1099-K, you sell things, you have cost basis, you're not going to pay taxes on that. All right, I know I've said two numbers, 400 and 600. The IRS standard for self-employment income is $400 profit. So if you do a business on the side, whether you are, making doll houses and selling them, and your total profit is more than $400, you are required to file a tax return, even if you didn't make any other money doing anything else. It's not the $12,000 standard deduction that you have to get above. For self-employment income, if you don't have taxes taken out of your W-2, it's $400, and you have to file a tax return. The $600 is what you get for a 1099 NEC for non-employee compensation. That's how much, if you hire someone or someone hires you and they pay more than $600, they are required to issue you a 1099 NEC. And now the 1099-K, which is for credit card transactions, that is now down to $600 when it used to be $20,000. So those are the numbers that I was throwing out during my little conversation with you here. Hope that clarifies things. And one more thing. Reporting income isn't necessarily a bad thing. Yes, you might pay taxes, but those taxes you're paying for self-employment are Social Security and Medicare taxes. So when you're old, I know it's hard to believe, but eventually you might be old like me and only 15 years away from collecting Social Security, you might get money that you're not going to have if you don't claim that income. So you might go all your life getting all this cash under the table, but then when you're 65 and you need Social Security, you're not going to have it. And here's the other thing. What if you're looking to show that you have a business and you want to get a loan so you can buy a house, and you can talk to Steve McDermott and he can get you a house? You need to have income shown. So just because you haven't been claiming that income doesn't mean that's in the best interest for you going forward. Might pay a little in taxes, but it could end up having you in a house.